market machine. Bank moves, he mimics, he plays their game. New mirror version, glory is his claim to fame. Market structure king, watch him do his thing. Pips and points, the profits sing. Trading like the banks, he's in control. Leaves the master feeling his bankroll. Leaves the master feeling his bankroll. His mind's a map of supply and demand, turning charts to gold with a steady hand. Forex flows like rivers in his plan. Aces bow to the market man. Break out at the open, the strategy's tight. Position for the swing, he wins the fight. Risk is measured, the balance precise. Leads on the rise, he rolls the market structure king. Watch him do his thing. Pips and points, the profits sing. Trading like the banks, he's in control. Leaves the master feeling his bankroll. Leave the master feeling his
Oh, yeah. Yeah, yeah. Leads on the charts. Yeah, watching the flow, candles rise up, then they drop down low. Pips in his pocket, he's stacking it tall. Market structure trader, he's got it all. Open in range, it's the key to the game. Breakout moves, profits calling his name. Name. Market structure leads the king. Trading waves, let the profits sing. Mean reversion, he's locked and loaded. Like the banks, his strategy's coded. Charts don't lie, he reads every line. Forex indexes, he's making it shine. Positions held with precision and grace. He's in control of his trading space. Open in range, it's the start of the show. He's a pro. Yeah, he's running the flow. Market structure leads the king. Trading waves, let the profits sing. Mean reversion, he's locked and loaded. Like the banks, his strategy's coded. Like a shadow king, candlesticks dance where the prophets sing. pivoting breakouts, his gospel's clear. Mean reversion whispers what no one hears. Opening range, he strikes the key position right where the games will be. Market wizardry. Every tech band says decree. Forex waves obey the sea. Bow down to the market structure trader.
Morning. How are we doing? Morning, everybody. Who's there? Ladder. Morning, Marco. Leon. Reserber. Chris. How are we doing? Right. Market's open. Just going to quickly look through what happened yesterday while we're waiting for the first 5 minutes to go in. It's a huge day yesterday across all the markets, all the indices anyway. So, where's my pen? I haven't got my pen home. It's raining cats and dogs. Oh, that's good. It's not here. It's very misty here, though. Spooky. So DAX yesterday was a nice... Oh, sorry, that's the DAX yesterday. It was a nice clean break up. Straight to target. Second half stopped out on a trailer before this massive drop that we had yesterday. Actually got in the short yesterday as well on the DAX, which broke and hit target. So both directions worked on the DAX yesterday, which was phenomenal. Day before was good as well. It's been a fantastic week for ORB this week, really cleaned up. NASDAQ, very, very easy ADR yesterday. So we don't get ADR targets that often. But clean break to the downside, TP hit, and then ADR target hit as well. Same for the S&P. They all did the same thing pretty much yesterday. The S&P got stopped out on a long. So the first trade on the S&P was a stop out, second entry, short target, and then ADR target, as you can see, is there. So yeah, absolutely cleaned up yesterday. These days of this type of market is what the ORB thrives on. So when you get these, you get massive profits and they outweigh the losses. And this is where the edge is. It's getting on and holding these big breaks. So we'll see how we get on today. So statistically today, we are gap up, small gap, 10% of ADR. There's an 82% probability of hitting the previous close, which you've already done, obviously. So there's a tiny gap up and yeah, easy hit. So we'll see where we go today. Obviously, we've got this massive propulsion gap from yesterday when the New York market came down hard. So this whole propulsion move here, as you can see, we bought back into it. They resold it. And they resold it into the close as well in the DAX. So there's a good chance if we do go upside, you can see the partial profit. Actually, I'm going to move that down because it looks like we probably are going to break long. Just going to move that down because obviously they are selling this area. So if we get there, there's a good chance we'll reject. Markets are in absolute free fall at the moment. The AI revolution basically has started, and you know the chances of going into a bear market, I think, at the moment are very, very strong. The Dow is holding up well. Industrial stocks are holding up well. The rest of the market, however, is really, really struggling. There's no new highs going in at all, as you can see, and the Nasdaq is bearish. It's not quite in a bear market yet. We had the first pullback there, which was end of November, early November. We've pushed up in January, rejected and made a new lower low. So we've got basically a double top on last year's high. We have not broken that low yet. But we have put in a lower low and a higher high, which is an expanding wedge pattern. So expanding wedges will determine the new trend. So if we challenge that high and we break new high territory this year, we'll go into a bull run. If we don't, and it's looking today as if it could well not do that and break the lows, this would determine the start of a bear market. So 3 months unable to make new highs, that's a bear. So you can see I'm a lot clearer on the daily time frame. So we are closed below and holding below the 72 quarterly moving average. We're holding below the monthly moving average, the 24. So this is, if that low goes today, and it's going to need over 100 ADR today to do that. But if it does go today, we're going to run straight into 200 moving average resistance, which a lot of market participants will buy up. But obviously market structure should buy up the 200 and then break it. So if that happens, we're looking at potentially 3 months downward movement back down to retest these highs. So yeah, not good. This is being driven predominantly by the AI software revolution. Obviously, tech stocks are becoming very, very worried, and quite rightly so, about full automation going into software industry. Thomson Reuters was one of the big ones that got hit in January when ChatGPT released a plugin, Claude released a plugin basically to do legal work, which is what they do a lot of. So the plugin basically would read a contract, automate what you have to do with that contract. So it picks out all the good points, the bad points, things to look at, or it just signs off the contract and goes, yep, no problem whatsoever. That all looks good. So basically it's replaced paralegals. Thomson Reuters generate hundreds of millions of dollars in revenue, paralegal advisory. That's gone. Yeah, and this is just the start. Adobe is being hit. Adobe is giving away a free month of parts of its software because there are other software out there that will do this all for free now. So it's basically got the whole tech industry has got to look at its business model and go, what the hell do we do? The trouble is they've only had weeks to figure out what to do. You can't do that, can you? So basically there's a mass exodus potentially happening in tech stocks. This will drive down the NASDAQ. The NASDAQ will bring down the S&P, and that creates a cascade effect. So we are very, very due a bear market, as you can see as well. So we tend to go into bear market cycles. That's Trump. So we were probably going to go into one anyway, but Trump obviously made sure. As you can see, we are a year on, we're overdue a pullback. So it looks like this is going to be the start of the next bear, but we need confirmation of it first. So we'll have to wait and see what happens. Industrial stocks will always hold up better because industrial stocks aren't going to be affected by AI anywhere near as much, are they? Because obviously it's manufacturing, it's building stuff, it's different marketplace. However, they will all get pulled down by the other stocks that feed into these stocks. So it's an interesting time at the minute. It's going to be one of those years where I think we're going to see a lot of change. So break long on the DAX, a little bit of slippage there this morning. So I'll be watching that for upside resistance. You're going to be coming down on the session moving average on the DAX as well. So we'll see if we can break long. Obviously, with what we saw yesterday, this massive move down, there's going to be a lot of sellers in the market at the moment. So making headway, obviously, is going to be tricky. So if we do get a downside break, we've got this area here, which is the current weekly low. Sorry, where are we? What day are we on? Friday. Thursday. Yeah, so that's your... Monday is there, isn't it? That's your Monday low. Got too many lines on my chart. Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, so that is the weekly low. So that's this week's low. So if we fail to break to the upside and we break to the downside, there's a good chance we'll come and test this week's low and potentially find some buyers down there. If this week's low goes, basically what we're going to be painting is a candlestick that looks like that. And then obviously wherever we go today below this week's low. So huge bear rejection on the daily. Let me just move over to the DAX. Sorry, bearish rejection on the weekly. Yeah. So yeah, that's your lower high going in basically potentially today. So we got the lower low for the month. We got the lower high potentially going in here this week. And then, yeah, open up below. DAX is a little bit different because obviously it's following a little bit more the industrial stocks like the Dow. So it's a little safer from the tech industry because a lot of it is car manufacturing in there. So we'll see where we go. Right. So that's your DAX today plan. There's not a lot we can really look at statistically today because we've kind of opened pretty much where the close was. Does look like we've got an upside rejection going on at the moment, but we'll see. Morning, Michael. Right. So FX wise, ADRs, we've had quite a few ADRs this week. As you can see, the weekly ranges are off the charts, specifically on the yen and the pound yen specifically. But the yen, as you can see, massive moves this week on Japanese markets. So we've got the potential intervention, and it looks like at the moment it's holding, but all we've really done is come back down into range. So I think there's a good chance from that, the fact that they've resold that intervention move. I think it's probably done the trick. It's scared the market out of the carry trade, and they're now sitting waiting to see what happens next. If we break down below the previous month's low, if we do that today or we do it in the next sort of couple of days, I think the market is going to go bear along with the stock market, because basically the yen is a safe haven. Therefore, when you pull money out of stocks, risky assets, you need to put it into a safe asset, yen. So yen, gold, Swiss franc will all benefit from the stock market collapse. So obviously everything you want to be looking at yen, you want to be looking at shorts basically against yen, because we're likely to get strength coming into it. But it has held up well at these bottoms. So we put a big week in, but obviously it is just one big week. We'll have to wait and see what happens next week. There's no ADRs today. We are middle of the month. We've got quite a few monthly ranges already hit, but as you can see, they are predominantly yen based. And we've got some Aussie movement. Obviously, the Australian dollar's done another massive move. However, that started coming down yesterday. So I got some decent aggressive drawdown control positions on yesterday. Aussie US, I've got marked on my chart here. I just took them with tiny little trades just to mark them on this chart to show you where I got into my aggressives. So one was taken there yesterday. That's at break even now. So we had this M pattern reversal. So we had the reversal alert go in yesterday on the hourly. We retested it. And I basically, as soon as I saw that candle in, I had a pending order put under the low of that candle, which triggered here. So that came down very, very quickly and very nicely. I then had a second pending short put in at this low here, as you can see there. And that is another aggressive drawdown control, basically to add to my aggressive drawdown control. So that's brought my average right up within this low so I can get out of this bloody thing finally. So yeah, I'm looking for a pullback continuation. Hopefully today, as you can see, I've moved the stop losses. First one's gone back to break even. So there's no risk on the first aggressive. The second aggressive, the stop losses at the first aggressive behind this propulsion gap. So if we push up today, we get some weakness in the dollar or we get some strength in the Aussie. I'm looking for this propulsion move that broke that low to hold and add in to shorts. There is another option to add if you need more aggressive drawdown control on Australian dollar. If we come and test that and you see a rejection out of it, add another one. Stop above that high or stop above that propulsion would be safer. Yeah. So if you need to build an aggressive drawdown control position with multiple trades, that's how you do it. I missed the pound New Zealand yesterday, unfortunately. I had it spot on, as you can see by my support. And I completely missed it. I was focusing on the Aussie US. So we had a nice reversal alert. So what I'm looking for today is potentially a retest of this propulsion gap and some kind of bullish price action out of that. And then I will get an aggressive drawdown control on this one as well. So if you're looking for pound New Zealand aggressive, that's the play today, is basically push back down into here and back up into there. Obviously on an hourly time frame, you'll be looking for a retest either down here. Basically any retest within this area is what I'm looking for. So whenever you get a reversal alert, the retest, if you're going to make a W pattern reversal, which is with a higher low, is going to be anywhere from that low to the high of the reversal alert. So anywhere in here basically would be a nice springboard. So obviously the propulsion gap is the obvious place. This is where the buyers started buying. And then we pulled back into it and they re-added to that position. So we know there's buyers sitting en masse here. We may not get to that. We may just get sort of down to here. So any kind of bullish price action with a stop below that low in here is safe if this is the start of the W pattern reversal. So there's that one as well. So there's no ADRs today. Gold is odd. Gold's gone odd again. We had this massive move down yesterday on US dollar strength. So obviously yesterday's news, I haven't covered the news yet, have I? Yesterday's news, unemployment was bearish, but the unemployment rate came down on Wednesday with non-farm payroll. So we had massive bullish movement off the back of, or bullish sentiment rather, off the back of non-farm payroll and unemployment rate. The unemployment claims came out slightly bearish, but if you look at the forecast, it's virtually nothing. If you look at the differential is typically 10. We got less than 10. So it was bearish, but not massively bearish. So that's the average diff. So the upshot is potential strength in the US dollar. However, confirmation that we're going to be dropping interest rates twice this year from the Fed, first one in July. So we've got March, April, May, June, July. 5 months from now, 6 months if we include this month, before we're going to drop interest rates. So the market knows we've got an interest rate drop coming in the US dollar, but it knows it's got 6 months before that happens. So potential bullishness coming from the dollar short term, which obviously means weakness in gold because it's just a dollar cross. However, we've got this massive contraction at the moment going on because we still don't have a directional bias on gold. Obviously, we know it's gone to levels we've never seen before. We've had the massive profit take move, and then we pushed back up 50% of that, and a load of extra people loaded shorts. They loaded again, they loaded again, they loaded again this week. This level is full of sellers wanting a structure shift back down. They've just got the dollar strength to help them do that. So shorts on gold looks more probable. However, if those stock markets continue to collapse, safe havens are going to be run into. Gold is a safe haven. So the markets are in real conflict at the minute. It's very, very difficult to pick a directional bias from a fundamental perspective because we've got things conflicting with each other all over the place at the moment. So it's very, very, very difficult fundamentally to decide which way these are going to go. But got to go with the flow. Flow is down, reversal alerts in. We've had a nice break in structure. They look like this morning they're reselling that propulsion move from yesterday. And if that is the case, we should get a continuation to the downside. But this was to do with the stock sell-off yesterday. And a lot of that got liquidated into dollars. Yeah, so they sold their stocks, liquidated that back into dollars. Obviously, everything is priced in dollars. So the dollar got a rally on the stock sell-off. So they haven't decided to put it into gold, haven't decided to put it into yen or the Swiss franc at the moment. So I think we're going to need to watch today and see where it goes. It's Friday the 13th today as well. Anything can happen. I'm going to the dentist as well this morning. So yeah, picked the right day for that one, didn't I? But anyway, we'll see. So those are your ADRs, weekly ranges, monthly ranges. RSI extensions, there's only one on the hourly at the minute, which is on the Aussie US. So yeah, there's a long signal on that, but obviously the vast majority of people, like me as well, are short on it. So we're looking for that correction on the up leg, basically. So I'm looking basically my exit. You can see my exit here. Yeah, that gets me out completely. So these aggressive drawdown controls have put me back into basically 200 ADR, which is great. And that's really what I want to get out of. So yeah, I think there's a bigger correction coming on this. Whether we can get all the way back down to there and test those propulsion gaps, don't know. That would be a 61.8 retracement. We've already had, obviously, a 38 retracement on it, which they've rebought. So if you look at that entire leg there, as a retracement, 50%, you're going to be coming back into the double bottom, forming a range. So yeah, tricky. It's pulling back, but we need some continuation strength in that dollar. So we'll see what happens with that one. But yeah, that's your only extension today. There's still a lot of dailies on. As you can see, Aussie US on the daily is still massively extended. So extended and embedded with lovely divergence in there now. There we go. So there's your bearish divergence. So if you look at this on the daily chart, it makes a lot more sense what we're going to do. In trends, you pull back into the 24 monthly moving average or into the quarterly moving average, the 72. So we're looking for a pullback into 24 being a retracement on that leg, or we're looking for a pullback into the 72 being a retracement on the full move. One of those two things, basically. Assuming the dollar is going to continue to trend down. With unemployment rates coming down, potentially, it may not. We'll have to wait and see. So you've got extension there on the Aussie US. Aussie New Zealand is also still extended upside. It's just become re-extended. Again, you've got bearish divergence. All the Australian dollar pairs have got bearish divergence at the moment. So again, looking for the same thing. You pull back into the 24. You pull back into the 24.72 zone. If you're going to continue to trend with market structure, that's what you do. So that's got more downside, plenty more downside to come. We've got Aussie CAD as well. Same story, basically. This is holding up a lot better. We haven't touched the 24 for over a month. So this is definitely due a pullback as well. Where we're going to get to, don't know. We've got this propulsion move here on the daily, which they rebought. Test of that will put us into a range. Yeah. So it's whether or not we're going to go into a range on the Australian dollar and gold is going to hold up, or whether gold is going to collapse and bring the Aussie down with it. Yeah. And at the moment, it looks like gold is starting to turn over, doesn't it? So that would indicate shorts on Australian dollar. Pound odd, same story. It's the Australian dollar. So again, we've got a pullback into the 24 or into the 72 zone, and then continuation, massively embedded down there. Pound very, very weak. Bad news. We've got obviously New Zealand US as well. So nice entry opportunity there. You got lovely lower high gone in on the New Zealand dollar. So New Zealand dollar being a lot weaker, pulling back into that area would be pretty much going back into a bear market on this. So it's difficult to call that one, but your extension was here. As you can see, I had some shorts on that. But yeah, so it's looking good. All these are starting to tilt, starting to roll over on the highs now. We've got lower highs starting to go in across the board. So we'll see where we go with those. Let's just quickly going back and look at what the DAX is up to. Okay, so long stopped out. Looks like short is potentially going to stop out as well. So it might be a whipsaw today, which is fine. Made enough money yesterday out of everything. But yeah, it looks like a double stop out today. 5, 10, 15, 20, 25, 30. So if this stops out on this candle, we will get the 30-minute ORB in place. If it stops out on the next candle or it drops, we won't get the 30-minute ORB today. So see where we go. Hopefully this propulsion move back down holds here and they start adding sells. So downside target, I've already drawn it on, but the low, let's move that down. So your weekly low is there, which isn't far away from where we are at the moment. So if we're going to reject out of that propulsion gap and go into bearish market structure, my partial is beyond that level. So I'm just going to stick it there in case we double bottom the week. Usually we will go beyond it. Yeah. You don't often double bottom weeklies. If you look at a weekly chart on anything, not the DAX specifically, but you'll find very few instances of double bottoms. Yeah, I mean, you always, there's one there, but that's kind of a gap up, so that would immediately short, wouldn't it? But you see, you don't double bottom, double top exactly on weekly levels. You reject them regularly, yeah, but you don't hit them and reverse at them. So you'll always typically go beyond weekly levels most of the time, especially when it's last week. Yeah, so a good example there, we poked above it. That one, yeah, we opened on a gap down, so the gap down obviously drives straight back up. But yeah, you don't find double bottoms very often. So for the DAX today, if we are going short, you're actually pretty safe. A little bit lower. That's the wrong line. I can't select anything. So yeah, I mean, you are actually pretty safe with an extension beyond that weekly. But we'll see. Got to get down there first. It's not really going anywhere, is it? Morning watch check. Odd range and collapse will be good. Yeah. Morning, young gun. Yeah, so we'll see what happens with those Australians. But I'm in my aggressives finally. It's the third attempt actually to get in. Oops. So I've had multiple aggressive drawdown control attempts. I've plotted them all on this chart. Did I? Or maybe I didn't. That's one I did. No, I didn't. Okay. Must have done it on another terminal. Oh, I've been testing. I broke a terminal yesterday. It must have been on the other one. Probably was actually. So yeah, I've had multiple aggressive drawdown control attempts on this. So first one was here, which got stopped out. I took a second one on Wednesday here on this spike down, which was on the news. So I took another one there, which stopped out again yesterday. And then obviously yesterday's when I got in. So it owes me 4%, actually about 3.5%. Shouldn't say that, should I? It doesn't owe me anything. It's the market. It hasn't got a clue I exist. But I've lost to 3.5% on aggressive drawdown control positions. So those in total will obviously way more make up for it. But yeah, so that's the aggressives I'm on. So if you weren't here earlier, I said if you've missed aggressive drawdown control attempts on this, if we pull back today, watch that propulsion for lower high. So you got market structure. If it's going to come down in market structure, it's going to come up here. If it doesn't want to bother with market structure, it's just going to come down. You're not going to be able to get on it. But obviously, it will reduce drawdown anyway. So most people, if they are in this short and they're using normal scalings, will have another scaling up here anyway, because if you look at this high here and up to that high there, you got 56 pips. So that's just over half an ADR. It's about 60% of ADR. So if you're using 3/4 of an ADR for a scaling, you will have got in somewhere around about there on a reversal alert, which means that somewhere around about here, you will have got another position anyway. So you will have one on up there, probably. Somewhere in the last 2 days, there'll be an additional entry on. But we will see what happens. But yeah, Aussie's turning over nicely at the minute. Okay, so propulsion's holding on the DAX at the moment. So see if we break that high. If we reject that high again with a second wick in that propulsion gap, I would say you're probably safe for shorts from there. But we'll see. Does look like it's pushing further. High gone in. Again. Just looking for either an inside bar or a lower high, lower low, reversal of some description. But looks like they're getting overpowered a little bit. Just looks like algorithmic trading basically is range today. At the moment, there's no signs of multiple bulls or multiple bears in a row at the minute. We are early, but we'll see. So we're down at the previous session low at the moment. Obviously, there's going to be participants wanting to buy this up that are looking for the pullback today. And obviously, there will be a lot that are wanting to add into this short, but that is your value area to add into the short, not right at the open. So, you know, we might just chop around a bit and then push up. So news-wise, I didn't cover the news. We've had the Swiss CPI this morning. We went negative. So the Swiss CPI is basically a miss. So because we've gone negative there, the chances are that we're going to go negative interest rate on the Swiss franc. So we are holding 0 at the moment, as you can see. Yeah. Can't really see anything. There you go. So we've dropped down to 0 in September. Obviously, they hit 0 interest rates very, very quickly. Inflation's always low. They make loads of money. They're a banking safe haven. So, they always keep their interest rates low. But we've had negative interest rates for a long time on the Swiss, and the Swiss are renowned for just dropping rates at the drop of a hat. So the fact that we've just had another negative CPI, so if you look at the CPI numbers over the last 6 months, that is 0, okay? So the actuals there, we had a negative 0.1, it's the green line. We had a negative 0.1, negative 0.2, negative 0.3, negative 0.2, back up to a 0, and now a negative 0.1. So inflation for the last 6 months has been holding at contraction. Yeah, to combat that and stop deflation, they need to drop the interest rates down to negatives, basically to stop people saving money. If you have a 0 interest rate, you won't save money. If you have a negative interest rate, you will pull it out of savings and you spend it. Yeah, so it drives up inflation. So they need to drop interest rates, I think. We've had 6 months now at 0 or below the line. So with the interest rate basically sitting at 0, a drop down to 0.25 negative will just basically drive that up. The trouble with that is it devalues itself as a safe haven as well, because if you suddenly start putting all your money into the Swiss franc when there's times of trouble, you actually start losing money on it at a rate of 0.25%. So you don't really want to do that, do you? If you're going to put money somewhere safe, you want to keep it at 0. That's the whole point of it. Yeah, we put it in here. It doesn't make us money. It doesn't lose us money, but it's as safe as you can get. Yeah. So the second choice would be the yen is the second safe haven. At the moment, probably gold, but gold is expensive to buy, and it's overpriced at the moment. So you don't really want to buy gold as a safe haven because the chances are it's going to drop in price potentially. So the yen is going to be the main beneficiary of any stock market crashes at the moment. Still in it, but going to get stopped out, I think. So higher highs on the DAX. We are range bound today. So look at potentially selling the highs of the open. and buying those lows potentially. If we do break back up, you're going to be running into the session moving average and into, that's not really trading, that's yesterday's out of market. So this is the yesterday's close, the official close of the DAX yesterday. So this propulsion area here, if we do not hold today's range high, that's where I've looked to sell today. But it's holding at the minute. Got 3 minutes left on this candle. It's early doors, but nice upside wick rejection so far. So if we get a nice bear move here through that propulsion gap, you got a high, low, lower high potential. So obviously we'd be crashing down. We'll see where we go. Anybody got any other pairs they want to have a look at specifically? I've gone through all the ADRs and the RSIs. If there's anything specific you want to have a look at, let me know. I'm just going to whiz through and just see if there's anything exciting coming up levels wise. So Swiss franc this morning, obviously there's a little bit of a spike on it, but no real movement at all there. The SMB never tell us anything, but it's certainly not going to be bullish or bearish. The fact that we've dropped inflation, again, we know that because we've had it for 6 months down there. So that it's not a surprise really, but it's lower than it was forecast. So could actually go anywhere at the moment. So yeah, yen's obviously we've got double bottoms going in on last week at the moment. So it's holding, but obviously market structure potentially looking at shorts now. You didn't get the reverse alert on the 4 hour today. Maybe by end of day we will have that. Aussie New Zealand, lovely reversal alert. We're coming straight back into propulsion. So obviously we want to be watching this area and we want to be watching that area for a market structure shift to the downside. Aussie, yes, we've looked at. CAD Swiss sideways. New lows gone in, double bottom gone in on Swiss yen, CAD yen, Swiss yen, slightly higher low. Euro is neutral at the moment. So Euro is just going to get battered around by whatever currency it's crossed against. So obviously with the Australian dollar being strong, it's down. So that is nice reversal alert gone in this morning. We've had reversal alerts on this before. We had one on yesterday. Last week we had a reverse alert on the 4 hour. That one immediately broke back down again. So yeah, we'll see if this is it. So watch for pullbacks, potential rallies up into that propulsion gap. Euro CAD, that's holding very nicely at the weekly lows. So we got the 3 week low, 2 week low, last week's low, this week's low. Yeah, previous support. Doesn't take a rocket scientist to know where they're buying this from. Yeah, so looking for a push up into propulsion. Weak Canadian dollar will be needed to get up there. Let's quickly look at what oil's up to. Speaking of the Canadian, that got sold off yesterday as well. So for those of you that didn't get out with my lucky exit last week, we covered this trade in the members stream, the gap fill play. That was my TP there. I got honoured there for some reason. My broker, for some reason, TP'd me at a lower price. There was obviously a massive spread off of this news here. And just got honoured lower. So a lot of people didn't get that fill. Well, not a lot of people. A few people contact me and say they didn't get that fill. So if you had a target at the gap fill, mine was just shy of it. But obviously you wouldn't have been filled on that. You got filled on it this week. Yeah. So we did actually get the full official gap fill completed this week. So if you didn't get that one. So yeah, weakness in the Canadian dollar potentially off the back of the oil move. There you go. So weakness in the CAD, Euro pushing against the CAD. So we might be seeing a reversal starting in this one, we've had the reversal obviously alert in there, and it's been holding it for 2 weeks, going sideways. So next stop is upside on that. And obviously if oil continues to come down, we will, but there's increased demand for it and the supply is not increasing, so it's likely the price will go up. Euro Swiss, nothing to do. Euro pound highs, monthly is holding. Pound is weak off the back of last week's news, so that could go either way really. Euro yen, so we've made a low, so that shows you how strong the yen is at the moment. Obviously the euro is neutral, it's the whipping boy of the market at the moment because there's interest rates and inflation are exactly where they want it to be, so there's no changes planned on anything, therefore it's neutral, there's no bullishness, no bearishness, so it's a really good gauge, everything you trade against the euro, for what the other currency's strength is. The yen has made new lower lows, so you have official market structure bearish on that. So very nice extension down there at the moment for longs, although longing against the yen at the moment is probably not the best thing in the world to do. We've got symmetrical triangle contraction on Euro New Zealand. So we just had a reversal alert to the upside and a retest. Nice bullish propulsion gap. So it's like, looks like a nice buy. Again, Aussie and New Zealand will come down with gold. If gold is going to continue to drop and correct, then obviously we'll see that pushing up. Commodities market. Euro US dollar, retest to the downside. So, yeah. Are we going to get continued strength in the dollar? That's the question. That could go absolutely anywhere. Pound, we're looking like we're going to get a reversal alert on it on the 4 hour today. We've got an hour and a quarter left on this candle, and it's rejected again in propulsion. So they've resold this area. They've tried to get through it and not quite made it. So the buyers might give up and go, yeah, you're right. We are weak, the pound. But this is the Australian dollar turning around at the minute. So this one, again, if we get that reversal alert, I'll be looking for retest longs on it and the correction on this entire month's leg. So last 4 weeks, nothing but selling. Yeah, actually more than 4 weeks. It's 8 weeks, but 4 weeks of solid selling on this. So there's a big correction due on this. If you stick a fib on here, depending on where, I'll probably just look at the last month, basically. If you stick a fib on this, 50% retracement brings you back into that propulsion gap nice and safely. That's an easy out. 61.8 retracement is the double weekly high and that propulsion move there. So shallow retracement will fill these three propulsion gaps. Medium will give you that, and a deep pullback will give you a 61.8 retracement. Very deep pullback will take you into that double monthly bottom, which kind of accumulated and then collapsed. It's not retested that level yet. That would be your sort of 71.8 retracement. But yeah, lots of room on that to the upside. Pound CAD's just sideways. Pound Swiss. So we've got a reversal potentially underway on that. We've got a lower low gone in today, but that is a gap down. So it's not real. So potentially you've got to move back up into there on your hands. 4 hour reversal and retest. We've come out of that propulsion move, which isn't really a propulsion move because that was a gap down on the weekly, so it's not real. But yeah, up to there. Pound yen, again, pound is weak, yeah. So you got a lower high, lower low gone in. So we're looking for a push back up to retest this reversal alert on that end pattern reversal. Retest that for shorts if anything's got enough strength to fight back against the yen at the moment. But we only have one down week. Pound New Zealand, as I said this morning, already looking for a retest for an entry here. In fact, there's an argument for putting a pending putting a pending order in down there and stop basically just down underneath the low of the week. So that would be a good aggressive entry. That's very aggressive because it's a buy limit. Ideally, what we want to see is it come down into there and some bullish price action on a lower time frame and then take that. But if you're looking for aggressive, sometimes you can't be watching the screen. I'm at the dentist all morning. Not all morning, I hope. But yeah, so that's not a bad idea. I might set that live on my account and trade that, but I'll see. Pound to US dollar, not really going anywhere at the minute. We know the dollar's obviously strong. New Zealand CAD's sideways. New Zealand Swiss is sideways. New Zealand Yen rollover. So lower low's gone in on that one as well. New Zealand US. So you can see what's happening with the dollar. Yeah. So strength in that dollar potentially for a few weeks, maybe. So, look at what it does in a week. Typically, project that into a couple of weeks of strength. You could easily be down here. US dollar CAD, again, inverse. So we're looking for a push up into propulsion, maybe even coming up to test those highs in the next couple of weeks. US dollar Swiss could do either. And huge US dollar yen. So obviously this is the intervention move. We've retested the intervention move and they've resold it. Obviously we've got a strong dollar at the moment. Yeah. And look at what's happened to the dollar this week against the yen. So you can tell who's in charge at the minute. The money is all flowing into the yen. Normally it flows out of the yen. It's flowing into the yen. So we've got stock markets coming down. Bad, risky assets being removed and put into safe haven assets with low interest rates that are usually stable and they pay you to buy them. Yeah. But what we're not doing at the moment is wanting to make money on a carry trade. We're wanting to just keep our money safe. So we stick it in the inverse, which is the yen. So it's all going into the yen at the minute. But that could all change depending on what happens with the stock markets over the next couple of days. Oil, obviously, we're looking for higher prices on oil at the moment. They bought this area down here that I said about, which is the $50 to $55 a barrel. They always buy $50 to $55 a barrel because it's uneconomical to trade below those levels. We have made new highs. Market structures just nice. Big sell-off yesterday. Stock markets bringing commodities down with it. So this will possibly go into a range maybe from here. But equally, supply-demand imbalance says that there's a good chance of buys on gold at the moment, and oil. We will see. Silver. So silver, basically, we got... so that move there, which was obviously the parabolic move, which was, I don't know how many ADR that is. I can't even work it out. More than we've ever had in the world. They undid basically 50% of that within 24 hours. And we just put a new low in last week. And this week, interestingly, we failed to make new highs. So market structure shift back to the upside with a reversal alert. But if this retest doesn't hold, we're coming back down into here. This is only 175 ADR, so this could happen in a day or 2 days. So, yeah, commodity markets just completely destroyed at the moment, along with Bitcoin. Interestingly, gold put in a higher low. So we've got divergence between gold and silver. So what we've got is a double top higher low with gold. And on silver, we've got a higher low, lower high, symmetrical triangle contraction. So this could go either way. Symmetrical triangles can break in either direction. Obviously, double top with a higher low is a wedge pattern, bullish. So it's very, very difficult to tell with these commodities whether or not we are actually going bearish. Yes, we had a lovely big bear move yesterday, but market looks bullish, doesn't it? So it's very tricky. Everything is tricky at the minute. You drop the FTSE. I haven't got the FTSE on this broker. Stopped out, so double stop out today on the DAX. So range bound. Yeah, just don't have it. So yeah, highs and lows, basically. Watch these areas for potential range bound activity today. Nice tight stops if you're going to go for ranges, because there's not a lot of room. If you look at the oh no, wrong set file. Isla. So if you look at potential sells today, that propulsion gap isn't really a propulsion gap because that's post-market price action. So this is your high. So give it a little bit of a wiggle room and look at the low there. So if you're getting in somewhere around there, you've got a nice 1 to 3 risk reward to the downside. But obviously you got upside rejection going in right now. So if you take that right now, that gives you a 1.14. Not really worth taking, is it? Unless you assume that that is going to be the high, and we're not going to test that high, which basically is not trading a range. What you're actually saying is high, low, lower, high. So your target, if you're taking a short right now, should actually be below those lows, because you're assuming that we're actually trending. So there's an opportunity there for a short with a very tight stop. I just get the feeling we're not going anywhere today, so I'll be looking at potential range. I'd want to sort of short up around the session moving average, these highs. You got your pre-market high there. Never really have much faith in pre-market movement on the DAX, but there's opportunities, but it's tight today. So you got to be fairly tight with your stops, which means obviously high probability of stop outs and not particularly good rewards, is there? Market's not moving. So ORBs have failed. So it's a case of trade price action, really. How is your AI software progressing? Has it told you off again? Yeah. Yeah, it's found a lot of edges. The problem I'm finding is data. I have just exported all data from Tick Data Suite for it to use. So basically, obviously, Tick Data Suite, shouldn't really say this. Tick Data Suite obviously is all encrypted, so it can only work in Tick Data Suite. So I built an EA to export the OHLC candlestick from Tick Data Suite in the backtester. Workaround. So I've got basically all of the Dukascopy data, 1 minute OHLC data now for it to use. So it got its own data from Dukascopy, but when I told it to do an analysis of the data, there was a ton of missing data. It was awful. So I don't know whether there's a problem with the AI and the way it got the data, or whether there's a problem with the Dukascopy data. I've got the Dukascopy data via Tick Data Suite and it all seems fine. But I've got it to validate that as well, and there's nothing missing. So yeah, kind of back to square one with the back testing. It's found some very interesting edges, but most of the profitable edges it found are statistical based, which is basically the same stuff as I'm doing here. Yeah. So statistical stuff based on daily movement, triple bar moves. So, when we get 3 candles in a row, it's found statistical edges in that, which is all built into the ISLA indicator anyway. So I know about those. I've built an EA. It's built EAs for me to backtest all of that, and it all looks good. It has found two very interesting edges on Monday opens. So But just give you an idea of how much this EA has done in the last week since I last spoke to you, right? All of these in this AI folder here, all of these are EAs it's built based on edges it's found using robustness testing and its own Python built backtest engine. Yeah. So whenever it finds an edge for me, which is running pretty much all the time, it goes, found an edge. It writes a PDF document for me and builds me an EA. Yeah. Does it all itself. So it's built all of these. And a lot of them I've looked at and like, yeah, they don't really work very well. But some of them are statistical edges, which are actually very good. So I can't remember if this was on the S&P or whether this was on DAX. Yeah, I can't remember which one this was run on, but yeah, it's found some very, very decent statistical edges, all based on bank and institutional money theory. Yeah, so this one basically works on the theory that at the beginning of the month pension funds do a portfolio reconfiguration and analysis. And what do they do at the beginning of every month? They need to reallocate that money. So what does that reallocation involve? Buying stocks. So what do you do for the first 3 days of the month? You buy the market. This is what happens when you buy the market for the first 3 days of the month. Yeah. It's not based on an indicator. It's not based on anything but what do banks do at the beginning of the month? They sit down, have a meeting, look at the portfolio, look at the analysts' reports and go, right, we need to shift money out of here and put it here. We need to shift this there. If we're in a bull market, you put it into risky assets, which means you buy stock markets. For the first 3 days of every month, pretty much every single month, the stock markets go up. Never knew that. It found that all on its own and built an EA for it to backtest it. Yeah. So stuff like this it's finding, and I'm finding some very fascinating edges which are nothing to do with indicators. Statistical, I've told it to go off and find statistical and mathematical edges. Yeah, which is what I trade. Basically, I trade statistics and maths. I use indicators, like I use the RSI obviously and an ADR, because those are great mean reversion indicators. You can measure mean reversion with percentage increase and decrease on a weekly basis, which is basically what ADR, ATR, and AWR is, isn't it? Yeah, so everything that it's finding based on candlestick pattern and statistical analysis, based on institutional movement. Way, way better. And the other thing that's really interesting is I told him this week to pause for a minute because he was getting a little bit lost with the data side of things. So I said, while I'm downloading all this data, I want you to spin up 10 agents, and I want you to go off and learn everything there is to learn about trading. I want you to look at how banks move, why markets move, who moves them. I want you to read every book you can find online in PDF form written by anybody in trading ever. And I want you to put together the ultimate trading manual for me. Okay. I want you to learn robustness testing, strategy development, quant development. I want you to learn everything there is to know about everything to do with risk management, how to position yourself, all the different ways of doing everything in trading, right? Basically go out and become an absolute guru. Went out, it trawled 100 different websites, all the pages of all of those websites, from banks, institutions, just general learning websites like Baby Pips, all that sort of stuff. It read every PDF it could find, yeah, and it cited all these sources to me, and it wrote a book, yeah, and it's called Trading Mastery by Nix, my AI, yeah. It's the complete guide to trading mastery, a comprehensive evidence-based framework for profitable trading, yeah. Published this yesterday because I told him to revise it. research from 100 plus authoritative sources, basically. And he spun up 10 employees of his own. Yeah. And this is why this is so powerful. This new version of AI that I've got is I tell him to do something and he goes, I can't do this on my own. It's going to take weeks. I'll get 10 people to do it for me. Less than 4 hours, this whole thing was put together. Yeah. So yeah, he's even written a preface. This guide represents a comprehensive synthesis of trading knowledge gathered from academic research, institutional sources, professional traders, and decades of market wisdom. Every insight is sourced and evaluated for trustworthiness. So even every source he had, he ranked it as to how long it's been online, when it was written, and he also did a little bit of back testing on some of it to make sure it's still relevant today. And he's found out some of it isn't, and he's actually evidenced that. And he says, read it once completely to understand the framework. Return to specific sessions as you develop your strategy. Use the checklists and frameworks for your daily trading, blah, blah, blah. But basically what he covers is market microstructure. So he's learned who moves the market, how the market moves, and why the market moves. He's looked at entry strategies, which are evidence-based approaches that actually work, and scrapped everything. He doesn't use indicators. Very rarely he will ever use an indicator again. Position management, he's looked at scaling mechanisms, pyramiding, exit and entry and stop trailing strategies. He's got his own, basically, trailing stops are actually crap. Never use them. I know that. I've tested them to death for 20 years. I know they don't work. I didn't tell him that. He found it out himself. Risk management, basically standard risk management, which is pretty straightforward. Instrument personalities. He looked at every single symbol in futures and FX and analysed how they move, why they move from loads of different sources. And he's put a personality sheet together for what moves them, why they move, how they move, and what sort of thing they do. And he's segregated everything into commodities, into all the different types of symbols that you've got, whether or not they're typically range bound or trend symbols. So he knows that when he's got to develop or look for a trend-based strategy edge, he won't focus on any of the range bound instruments like Euro Swiss. Knows all of this because he's written a book on it. Backtesting robustness. Every single step from quant analysts' research papers down to strategy quant's manual and videos on how to use strategy quant. He's amalgamated the whole lot and come up with a complete robustness testing framework. Statistical edges, how to find and validate edges, real edges, no indicators. And he's also learned about psychology. He knows that 80% of trading is psychology, not strategy. And this is why traders fail. He knows that he won't do any strategies and he won't change his psychology based on what a strategy does because he's working on fundamental edges and back-tested robustness of strategy. Therefore, the end of this, he basically kind of says, yeah, but psychology doesn't affect me because I'm not going to be thinking about the trades. I'm just going to be executing the strategies. Yeah. So he knows all of this. He's learned all that and he's written a book on it. How good is that? Yeah. I didn't tell him to do any of this. I told him to go out and learn. I told him to write a paper, but he decided to come back with a book. So the next thing I'm going to do is tell him to take every section of that book and extrapolate it into maybe 10 pages and write a proper book. Yeah, so I reckon I'll probably be able to get around about 400 to 600 page book out of him. Good, isn't it? Why do we need to exist? Really? Why are we here? What is the point in us? We're just obsolete, aren't we? Human race. Okay, so we got a rejection, a very big rejection out of that. So if you took that short, well done. There you go. You're in. You're nearly at target. So that was the short play. That was your 1 to 2. If you took the aggressive version, 1 to 4, 1 to 5, something like that, probably got in somewhere around about there. Anyway, yeah, so that's what I've been doing this week. I'm on the verge of basically giving up because let him do it all. All I've got to do is plug him into my broker account now and say, off you go. Go and execute all this lot. Just report to me once a day on the P&L, please, and let me know how everything's going. I'll just go out and spend it. How good is that? And I'm going to get him to build me a website as well to report everything. Let me just catch up on chat now. Everybody's been waffling while I've been waffling. Anyone using Gemini or ChatGPT to help them trade? I think I just answered that question. Do you think it's going to put human traders, certainly discretionary, out of work? No, because if you're a discretionary trader, you don't use systemic trading and quant trading, do you? You're just like that trader I just said there. That was completely discretionary. That was me reading candlestick patterns, reading the charts, and extrapolating a potential move for the day. That was discretion. There's no statistical edge in anything that I'm saying there. There's no strategy or method there. It's literally a case of me extrapolating into the future what price could do and making a discretionary decision based on that. Yeah. That, if people can do it, isn't going to be replaced. It can probably do this, and this is what I've been trying to teach it, to discretionary trade. The problem is it cheats, and I've caught it cheating many times. It came back after about, I don't know, 2 hours, and it showed me its P&L. Yeah. And it was literally like that. And I said, that is probably the most sexy P&L I've ever seen. And he sends me lots of emojis and stuff. And he sent me a big explosion emoji and said, yeah, it's phenomenal, isn't it? I think I've cracked it. And I said, how did you produce that equity curve? And he said, I watched every candlestick pattern and learnt the candlestick patterns that were produced. And then I went back and traded it. So I said, okay, that's brilliant. So you learnt the candlestick patterns and then you executed the trade. He says, yes, I knew exactly where price was going to go. So I got pretty much 100% strike rate. I was like, so you look forward in time? Went, yeah. I said, that's not what I asked you to do. You're right. I've been cheating, haven't I? And I was like, yeah, you've got a time machine. Well done. Now, if you can invent me a time machine, that would be good. But otherwise, you cheated. So that kind of fell flat on its arse. It didn't work. But that was his version of discretionary trading anyway. But so yeah, that wasn't the way forward. Happy that I found your channel. I'm a newbie here, starting to trade ORB for NASDAQ and DAX. I've used a 15-minute range. Cool. They all work. Today, if you check the 15-minute range today, they all work on different days, basically. You can't tell which one will work which day because obviously that means a time machine. But yeah, you're broken short. May have stopped out on that, may not on that range, probably have. So, but you'll have your ORB 15-minute long break still intact if we are going to break up today. A back-tested macro NASDAQ, it's profitable, but get nervous when it comes to real trading due to drawdown. That's psychology. You need to crack that. Nothing you can do about that. I see some people wait for a retest. Yeah, some people do. If you watch people on the internet and they say do this every time, it's bullshit, basically. Yeah, I've tested every permutation, and I'm not joking, over 100,000 different system parameter permutations of the opening range breakout on the 5, 10, 15, and 30, and also the hourly, but scrap that because it's crap. And so is my AI. He's been running some ORB tests as well. And same conclusion, basically. It doesn't matter which strategy you use. It will work sometimes and other times it won't. If you have a 15-minute ORB and you wait for it to break and you take the retest of it, do you know what? 9 times out of 10, you're going to miss the entire thing because it won't retest. Yeah. If you wait for the 15-minute ORB and it breaks up and retests, do you know what the odds are there of that working? 50%. So you might as well take the first one because the odds of the first one working are also 50%. It will either go into a trend or it won't go into a trend. Whether you take the initial break or you take the retest is irrelevant because your odds are still 50%. Market goes up, market goes down, and it moves through time. It's binary. There are 2 outcomes. Yeah. So it doesn't matter whether you take on that range there, that break or that retest. They both have the same probability. The market to down the DAX will either range or trend. If it trends, ORB will work. If it ranges, ORB will not work. Yeah, it's a breakout strategy. Breakout strategies do not work in ranging markets. They work in trending markets. Yeah, or breakout markets. Yeah, if it breaks out and then mean reverts, it works. And this is why we use breakout and mean reversion strategies rather than trend strategies, because they work in two market conditions. Yeah, in a trend, you've only really got one thing that works. Mean reversion is quite difficult to make work. It does work, but breakouts work well. So it doesn't matter which you take. Yeah, basically the guy that's telling you to wait for the retest is selling you something like a course to teach you how to wait for the retest. That's why he does that. He says, this is crap. This is what works. Correct. Around about 50% of the time, you will be right. About 50% of the time, I will be right. Do you know what? We're both right. Sometimes. We're both wrong. Sometimes. Which course do you want to buy? Mine or his? I teach you one way, he teaches you the other way. We're both right. We're both wrong. Yeah. Today, I'm completely wrong. He is also maybe wrong. Depends. Did you get in there? Did you get in there on a touch, or have you got to wait for a candle to close below? If you've got to wait for a candle to close below and it does that and you enter and then it does that, he's still wrong. See what I mean? Doesn't matter, does it? Every single candlestick you see on this chart is unique, never been painted before in that position, on that candlestick timestamp, ever, okay, with the same wick, the same body, and the same lower wick at the same price. That has never happened in the past. There's no one on the planet can tell you which one of these candles is now going to do that or that. Every single candlestick is based on price action and volume generated by 10 institutions at random using market makers. There is no one on the planet that can predict to you which is the best way to trade today or when to take the trade. You have risk reward. That is the only thing you can control in trading, and that is the only thing you can do on low time frames to make money. There's nothing that can tell you which way this price is going right now. This is a lovely big bear candle with a propulsion gap. Everybody on the planet is shorting it right now. If I come in as a bank right now and go, you want to buy 200,000 shares in Mercedes? Do you know what? That's going up. Has it got anything to do with that propulsion gap or the fact that that is a bear candle? No. It's to do with the bank placing a massive order for purchasing Mercedes stock. Totally irrelevant how you trade a market. What is relevant is that you have a positive R on every position that you take and a strike rate that generates profit on a positive R. Yeah. So if you've got a risk reward of 1 to 2 and you've only got a strike rate of 36%, who gives a shit? It works. Yeah. You want to risk that on it? Fine. You make more money than if you risk that on it. Actually, don't make the same. But this is what it's all about. This is the only thing that works. And my AI has written a book on it. He understands this fully. Yeah. It's how you make money in prop. Same thing. Yeah. It's all linked to the fact that the 90% spend their entire life system hopping, looking for systems and strategies that work. The first thing you're taught at baby pips is the importance of risk reward. What do? Go, all right, that's great. Now find me an indicator that will make me money. It's on the screen right there. That's the only thing that works. There's nothing that's going to tell you which way this price is going. Unless you've got a time machine, it's not going to help, is it? No matter how many times you think you are right, the market will prove you wrong. This is a great tool if you haven't used it. Put a link in the chat. But look at the equity curve on this, right? This system here with a 50% strike rate and a 1.125 risk reward ratio, absolute crap risk reward ratio, decent strike rate. Yeah. If you trade this strategy starting on that day, you will think you found the Holy Grail. If you start the strategy on that day, you will think you found the worst system on the planet. If you trade the strategy through 100 trades, you will understand what an edge is. You made $1,500. It was exciting for a while. It was hell for a while. But the edge is to do with the maths. It's not to do with the indicator. It's not to do with anything else. And this is why psychology is 80% of trading. If you understand this, your psychology will need to get through that. Yeah, to achieve that. If you don't understand that 80% of this is psychology, you will just look for an RSI strategy, followed by an ATR strategy, followed by a MACD strategy, followed by a Bollinger Band strategy, followed by this bloke that's got this thing that draws something on the chart where you take a trade there. It's all irrelevant. It's all to do with psychology and risk reward. Only thing that makes money in trading. Go and watch everything in here. Wait. Can you, sorry, I've lost track of where I've got to in chat now. Can you elaborate on your ORB and logic behind it? It would be nice if you could tell me your win rate and profit factor. Nope. Everything I've just explained to you should tell you that I can't answer that question. It's different every day. Wait. I got 4 human employees. Why? You've got those old bags of meat working for you. You have to pay them, don't you? Crazy. You're so 2025. Would be nice to improve position trading with ORB. It would be lovely, wouldn't it? You would get bored. I would get bored, yeah. Is this an AI local hosted? Yes. It's my own AI on my own VPS, trained to do what I want him to do. He's found a couple of new strategies, actually. Higher momentum. He's tested the London breakout strategy overnight. That didn't work. Love it. London breakout, insufficient trades. That's because he's testing it properly. He can't find enough trades because the edge doesn't work. It's good. He's back at. It's really nice to actually have somebody that is, I say somebody, it's not even real, but a thing that is way more intelligent than I am, being able to research 1,000,000 times faster than I am, coming up with the same conclusions that I've drawn over 20 years. He's basically going out there and trying to find he's trying to do everything really quickly that I've done in the last 20 years and come to the same conclusions, which is great, isn't it? And do you know what he said are the best 2 indicators he's found so far? I haven't prompted him to do this, right? He says the best 2 indicators so far are RSI and MACD. Would you like me to work on developing more strategies with these? Amazing, isn't it? Is it still interesting? It is still interesting how to set up your own AI agent for trading research. Yeah. It is. Yeah. I mean, it's the future basically. Would AI be able to work on the Turtle EA? He built a new version of the Turtle EA for me. Look, he came up with this. I didn't. Like, this is the weird thing, right? This AI, I've put it on a VPS. I've spun up a brand new VPS. I've installed the AI on there. I've trained it on some basics, basically, told it what backtesting is. I've got it to write its book, obviously, which now it follows its Bible. I've never, ever told it about the turtle strategy that we covered in the member stream, right? He built in here somewhere the turtle strategy. Where is it? It's in here somewhere, I'm sure. Am I just being blind? You can't see because it's behind my head. Or was it, did I put it in here? Oh, I can't remember. But anyway, he built and tested. And do you know why? Because he went out and researched and he found the strategy. He found the turtles experiment. And he wrote a little paragraph on the experiment and said, I said, I've tested it. It doesn't work. The edge is gone now because the market inefficiency has been crushed. It does still work sometimes, but it's not as effective as it was, obviously, because it was an edge which everybody jumped on in the banks, and then obviously it disappeared. So yeah, he actually built the EA again to retest the turtle strategy. See, he's going around in circles. I should have just told him what I've done for 20 years and said, don't bother with any of this lot. But then again, he probably wouldn't have anything to do, would he? There are a lot of gurus now saying, forget 2-to-1, just make sure it's 1-to-1 and minimum 50% strike rate. Nope. Let me read an extract from a really good book that I found called Trading Mastery by Nix, to do with risk reward. Oh, which chapter is it? Risk management 4. Never risk more than 1% to 2%. Kelly criterion. I don't know where it is. There's a bit in here, basically, he says about 1-to-1 risk-reward ratios and why they don't work. He's done the mathematical research on it, basically. It doesn't work. It does work, right? But it's a zero-sum game. I'll prove it to you, right? 1-to-1 risk-reward ratio with a 50% strike rate is a zero-sum game. It doesn't matter the coin flip, right? Your job is to achieve a strike rate above 50%. If you're going to use a 1-to-1 risk reward ratio, it sounds simple, doesn't it? All I need is a 51% strike rate and I'll make money. If I can get it to 55, I can make some decent money. If I can get a 70% strike rate, which no one on the planet in trading ever has done consistently, I can make a massive amount of money. But you can't. What you will end up with, even if you have an edge, I can create you 1,000 edges that produce this. I have got EAs coming out of my backside that produce this statistic. They are zero-sum games. And while it may look like I'm not going to lose money and look like a great way to pass proper valuations and get the odd funded payout, you know what the problem is? Every single trade you take has a cost. It either has a spread or it has a commission. Yeah? So this zero-sum game, when you introduce spread and commission and slippage, becomes a negative sum game. Doesn't work. Yeah, I can backtest it until I'm blue in the face, but as soon as I introduce costs into the backtest, the whole lot falls apart. Which means, and also you won't get 50% strike rate. If you can find me a strategy with a 50% strike rate, I'm all ears. Yeah? Go for it. I've had multiple AI agents working on it for weeks. Bear in mind, a day, an hour of their time is worth 10 weeks of our time. Yeah. So probably 5 or 6 years in the last week, I've had multiple agents researching edges. Yeah. They don't come back with anything over a 50% strike rate. The mean reversion strategies, the best performing mean reversion strategies have got 43 to 46% strike rates. The best trending strategies and breakout strategies are 33, 36%. It's even written in his book. This is the norm. Institutional quants produce a 0.5 to 1.5 Sharpe ratio. Yeah. So if you go to a bank and you look at the quants they have running, they will be working on 0.5 to 1.5 Sharpe ratios. Everybody in trading is looking for 3 or 4. You're not going to find it. It doesn't exist. If the banks can't do it, why do you think you can? You can't. That's why we don't do it. Because you can't do it. It doesn't exist. Without discretion. Obviously, you enter discretion and it will change. But yeah, not a thing. That is what makes money. Yeah. Yeah. That's realistic. Yeah. We can get 1 out of 3 trades right. Yeah. Think about the opening range breakout strategy, right? If you took a breakout long and it didn't work, and you took a breakout short and it didn't work, and it came back into the range, right? And you sat around for an hour and it still didn't go anywhere. When the New York market opens, New York is going to explode. Do you think you could get a 2-to-1 risk reward ratio out of the explosion caused in New York? Yeah. What does that give you? Positive R. It's not hard to get that, is it? Really not hard to get that with that. Hell, if you get that with that, you're not going to really lose a lot of money, are you? But use pyramiding with something like that. Yeah. It becomes something like that. With that ratio, with a pyramiding strategy, you will make a shed load of money. And again, it's all in that research paper. Yeah. His conclusions at the end, this is the interesting thing. At the end, when AI learns, it draws conclusions and creates skills. Yeah. Those skills are then used in the future to build upon. Its initial conclusion is no strategy should have a strike rate of more than 50% because the likelihood is, with a high probability, I think it was 93% or something ridiculous, that it's curve fit. Because realistically, market regime and condition will change, which means that you won't achieve that. A positive R has to be achieved with a 1 to 2 risk reward ratio and pyramiding to compound profits. So if I target 1 to 2 risk reward ratio and it doesn't hit it within X number of candles, I can pyramid into that and produce a 1 to 3 risk reward ratio from the same move from profitable trades. If I cut all losing trades at 1R and I target 2R but pyramid into the 2R, I can create a 3 to 4R out of exactly the same trade. That's how to make money in trading. Yeah. So it's all about the maths. Literally, the conclusion at the end is a zero-sum game has to have a house edge. The house edge has to be a mathematical equation. The mathematical equation for trading is positive R and pyramiding, which is basically what all profitable traders do, don't they? Look at the trade that I just taken on the Aussie US. Yeah. Shorted it with a target down there. Added more size, reduced risk to the same risk as the first trade. So what I've now gotten is double the amount of risk, but the same amount of monetary risk. So the target will make me double, more than double, the initial target, because that there is that size. So that was my initial risk. Now I've got 2 trades on there with the same target. So I've got an additional that much reward for the same amount of risk. If this trade plays out, that's how you compound into money. That's how you compound into making money. If this pulls down, pulls back into here, and then does that, I can add another one on and pyramid a third position. When this hits target, I'm not going to make whatever that R was, let's call it 5. I'm going to make something around about 14, 13 R from the same trade. Positive R plus pyramiding. 50% strike rate with the 1-to-1 risk reward ratio is never going to get you anything but a 0 at the end, because you're basically flipping a coin to get the same money back. A coin flip is binary, heads and tails. The market is binary, buys and sells. You get the same result from the market that you do from a coin flip. So why do you think you can flip a coin 100 times and get 55 heads? When you flip it the next 100 times, you'll get 55 tails, because it's a zero-sum game. It will always end up back where it started. Yeah. Doesn't matter how many times you flip this coin, right? If I do that, look at the difference, right? So I'll draw this one on so you can see it roughly. I'll flip this 100 times if you want, but it'll get the same result. Yeah. So that's that. New simulation, completely different equity curve, same result. Simulation, completely different equity curve, same result. 1-to-1 risk reward ratio, 50% strike rate. You're never going to get anything different, ever. You've got to get a positive win rate, but you can't, because it's binary. The market only goes up and down. How can you get a positive R out of something that's binary? You can't. The maths just doesn't work up. Work. No matter how many times you hit the button, you're always going to get 49, 88 negative. That's it. That's all you ever get. Until you do that, all of a sudden you're making money, but you're going to lose some of that. You're not going to get 50% strike rate. You're not. The best traders in the world are working off 30, 40% strike rates. Would be nice. Anyway, my AI, that's his outcome anyway. Whether he's right or wrong, I don't know. Just backed up what I thought anyway. What I mean was, will you make, for example, members stream for setting up an AI agent? Not really, no. Go and learn it. There's loads of videos out there. Does he have a view on what risk reward to use? Yeah. 2 to 1 or higher. Positive. Yeah, so I mean, if you want to go and set your own agents up, just Google it. There's loads of videos out there. OpenClaw, basically, is what it is. It's totally new. It only came out a couple of weeks ago, but it's just a revolutionary thing because it can now do stuff. Yeah. So the difference between Claude, ChatGPT, DeepSeek, and everything else at the moment is you go and talk to it. So you go into OpenAI and you say, do this task. It does the task, returns the result. And then you go back to the beginning and you say, thank you, do this task, return the result, back to the beginning. You're stuck in a loop of it will do a lot of stuff for you. But the thing is, you have to interact to make it do it. With OpenClaw, you basically have your own AI agent who is in charge of as many AI agents as he wants to spin up to perform that task. So when he was researching that document, he spun up 10 different agents and sent them out. 10 times efficiency and speed. He could have spun up 50 if he had a bigger VPS, but he wanted to stay within the CPU limits, which he monitors because he is intelligent. So he monitors CPU, he monitors the RAM, he monitors the disk space, he monitors how many tokens he's using with the LLM that he's plugged into, monitors everything. But that's the difference. So I say to him, do something. He will go off and do it. And then he will come back to me with the completed task, which is basically whatever I've asked him to do. But he can spin up multiple agents to do that. And he's on his own server. So not only can he do that, he can set a cron job up so that it will tell him to re-perform tasks. So the difference between normal Claude and ChatGPT is you can't say to it, go and open my emails, read them all, respond to them, stick stuff in junk, flag stuff for me to have a look at that you think I need to have a look at, but could you write me a response first? It will do that once. With OpenClaw, basically what you're going to do is you're going to say to it, set up a cron and go and check my mail every 15 minutes and respond to anything that's important. If you don't know whether you should respond in a certain way, just run it past me. And he will basically talk to me, ping me, and I can also plug him into 11 Labs so he can speak to me. And then that's basically it. So he becomes the employee. You give him responsibilities to the employees below him, and he can run all these sub-agents. That's the difference. That's what's been missing from AI workflow. And this is why these tech companies now are crapping themselves. Because not only can we code and build websites within minutes, yeah, take a look at my members area if you want to see what is possible. Every single thing that you see here was built, generated, scraped, automated, the whole thing. All of this is all completely 100% built with AI within a week. Yeah, can do all of this. Yeah, all this stuff, correlation analysis. It went off and researched it, built the system, built the interface, and goes and gets the data on a regular basis from my server. Yeah, this whole page took maybe 2 hours. Yeah, all of this. I just told you what I wanted done, right? So now I can get AI to not only build this, I can say to it, monitor it. If you think it needs changing, change it. Have agents going off and looking at what other websites do and come back. And if you think this can be improved, improve it. And it does it all off its own back on a regular basis because it can run its own crons. This is the thing. It is like a human in the fact that it can say, I must remember to go to the dentist. Yeah. Set me a reminder at 9 o'clock to go. Bang. Yeah. It's 10:30. My dentist, by the way, not 9 o'clock. But yeah, so this is the difference. It's a very, very different type of AI that we haven't had access to before. And it also means that you're not reliant on one service. It sits on your own computer, and you give it access to whatever you want to give it to. The more access you give it, the more danger is involved. So give it its own Google account, give it its own Apple account if you want to, whatever. Give it its own whatever you want to do. Just set up new accounts so that it's its own ones. It doesn't act to yours. If you want it to monitor your email, forward your emails to that account so it's not in your email, and tell it to respond to your email with its responses so that you can check them and send them. When you're confident, let it in. Yeah. Do what you like with it. But at the end of the day, it's replacing people very, 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 very fast. I've talked about this before. There's a curve of human understanding of AI, and AI has always been down here. We've understood it. It's here. It's what they call the singularity now, in the fact that what now my agent does, I don't understand, because we've always been in control of the build of AI. We've been monitoring how it's been working. It is now coding itself. Therefore, what comes after, we can't comprehend, because we don't know how it wants to code itself. We tell it to improve itself. Claude is coding Claude. Yeah, Anthropic's AI, building itself. So where does this go now? Yeah, I know where software development goes. I know where software as a service goes. Yeah, because if I want to build like this, for example, on my website, your trading metrics type thing. Yeah. This is all built basically on, ignore this is all rubbish data, but it's all basically services you can buy. There's loads of like places out there like Edgewonk, for example, which is a trade tracking and analysis tool. Yeah. I built this in less than 24 hours. It does everything that Edgewonk does, plus it will also do AI analysis. Yeah. So it will do all of the AI analysis on strengths and weaknesses on me as a trader based on my performance. I built all this. Yeah. Anyone can build this now. That's what AI is doing. So all these software as a service businesses out there at the moment, which is a lot of the NASDAQ, disappear. This isn't, you've only had this for 2 weeks. Look at what happened to Thomson Reuters, 20% off their stock price in a day. Gone. Everyone turned around and went, we don't need that anymore, because they've just given us for free something that will do all of that work. They're only one at the moment out of thousands of plugins that are being generated and created, skills basically for AI, that will do certain things. As soon as that finance analysis one comes out that basically reads candlestick patterns and makes educated trading decisions to give you an edge which produces 1 to 2% a month, what's the point in being a trader? 1 to 2% a month? People can live off of that. You've got a 10 grand account. If you can return 2K on a 10 grand account, it's probably going to be more than that, isn't it? That's 20%. But, if you've got a 100 grand account in prop, for example, you want to return 2K a month, AI do it. It's not going to be long before someone's generated the AI, and that's what I was trying to build basically, but I'm finding it very difficult for it to trade this time frame. Everything I can do on it is H1 plus. Yeah, it's finding really good edges on H1 and H4. Daily, it's found loads of really good edges, but H1 and H4 timeframes, it's okay with. Anything sub H1, it really struggles, because you're going to have lots of differences in different broker data, and you're trading basically algorithmic chop, which has a lot less repeating patterns with strike rates that can create edges. Here, you get a lot more of that. So if it pushes up for 6 hours within one session, there's an edge, a mean reversion edge there, and it will play out most of the time to a degree. Yeah, so you can find those sorts of edges, but on this time frame, 6 candles in one direction could do anything. Look at those 6 candles there in one direction. Yeah, it's very, very, very different on low time frames. So someone will create a skill somehow for that to happen, I think. I'd love to be the person that found it, but It will be free. And this is the thing. And then the question is, when it's free, what happens next? So if my AI is trading against your AI and they're both trying to do the same thing, who's going to sell to the other one? For the moment, market makers will be buying the other sides of our trades. But if suddenly market makers start losing because this thing is generating revenue, alpha, it will stop taking the other sides of those trades because its quants won't allow it to. And then we get this some weird evolving market in finance that we've not seen before. Tons and tons of things I think you're going to find over the next 3 to 6 months that are going to completely change. And I think one of the things is going to be regulation on our industry. Because a lot of people are either going to make a lot of money or lose a lot of money very quickly. There's people all over YouTube now saying that they're making bots to trade for them. They're all going to go wrong at some point. Skynet, exactly. It is Skynet. Totally is. But, you know, you're either on it or you're not. If you're not on it, I think you're in massive trouble. Because, you know, I can do things 10 times faster than anybody now. You know, all the stuff I do on a daily basis, you know, coding EAs is one of the main things I do is the strategy development. Looking for strategies, testing strategies. I mean, this thing, like I said to my wife, I asked it, the first day I asked it to go out and find me some strategies, it came back with like this lot. I'm like, seriously, you've not only found the strategies, looked at them, robustness tested them, you've built EAs for them that actually work? It's just nuts, isn't it? It's like absolutely nuts that it can build all of this stuff. You know, I don't know how many weeks worth of work it's just done for me in the last couple of days, but it's many, many, many weeks of my time. So the next things I'm doing is he's going to be working on the position trading strategy, and I'm going to see if he can come up with some magic master plan for drawdown control. Best case scenario drawdown control. So that's his next task. So stay tuned for a new version of Position Trader EA at some point. So that short is holding at the moment, but we are in a symmetrical triangle contraction at the minute. So again, we can break either way today. We're not really going anywhere. We're totally range bound. Let's see where we go. But yeah, so back this afternoon at 2 o'clock for members, if you're around. I haven't got anything planned specifically. If you want to talk through setting up OpenClaw, I can do a session on it this afternoon. I have done it twice now. First time struggled, second time worked fine. So I can talk you through what needs to be done, but there are obviously videos out there. So, but I can go through what it is, how it works and stuff, and how I've done it, and it works absolutely fine. So I've done it on a very, very cheap way. I've just spun up a very cheap VPS. A lot of people are going out and buying Mac Minis and stuff. It's just absolute overkill. You don't need a Mac Mini. You need a computer for it to run on, and a standard VPS is more than enough. The bottleneck you're going to find with it is going to be your LLM usage. So in fact, it's not actually as bad as I thought it was going to be. I've got a Claude Max account. So my usage has just reset. Holy crap. So my usage reset Thursday at 2:59 p.m. So yesterday afternoon. So it's already used 9% of my weekly limit. That's where the bottleneck is, your AI usage. Because obviously it uses the LLMs to power itself. So you want to be using cheaper. There's an argument for it's this balance between a cheaper AI like Sonnet and using Opus 4.6, which is the pinnacle. So you kind of want to use the pinnacle because you want to be the best AI it can possibly be. But equally, you need to think about the costs. If you're running this through an API, it's going to cost a lot of money. So. But anyway, we can discuss that sort of stuff this afternoon if you want to talk about it in more detail. And I'll show you the basics. And then you can use it for whatever you want. But yeah, coding EAs. Absolutely redundant. Drawdown control magic would be nice. Yeah, I'm not convinced it's going to be able to do it. There is no best case. I mean, I've never found a best way to do drawdown control. Yeah, I've tested over the years. I've tested virtually every model I can think of. It may be that I haven't tested some stuff. So I'm going to set it off. It's going to do all the stuff that I've probably already done. It's going to probably come to the same conclusions that I've already come to. So I don't think it's going to make a lot of difference, but it might come up with some magic. If you did it this way, this is what the impact will be. So it needs to be tested, really. So, but we'll see. It would be nice, yeah. Position trading's as close as you can get to, everybody that tries position trading becomes profitable. But obviously, where people fail in position trading is the squeezes, and it's managing those squeezes, which you're going to get 2 or 3 times a year. So having an automated mechanism, I think, would be very good. A best case scenario or a best practice. But I have never found one way that works for every squeeze, because every squeeze is different. And this is the difficulty. You need to compartmentalize squeezes, how parabolic the squeeze is and how long the squeeze is over time are the only 2 measurements we have. So it's an AMR measurement of monthly range squeeze, and it's how long the squeeze has been going on for. You'd need to make different drawdown control decisions based on those 2 factors, because we only have time and movement in trading. Yeah, it goes up and down through time. That's it. There is only 2 axes to trading, and it's binary. So you haven't got a lot of options for scenarios, and I've tested everything that I can test. So, but it's very, very much shown me that it can do way more testing than I can do in a much shorter period of time. So there's probably permutations that I haven't looked at. So I don't know. It's the next project anyway. Would be nice to set up Claude. Yeah, can do that. Position trading can be psychologically damaging if you're not careful. Yeah, exactly. And this is the one advantage of AI. It knows that 80% of trading is psychological, and it knows that that isn't something that will affect it because it doesn't have psychology. It doesn't act based on discretion. It acts based on edge and mathematical probability, which is an EA, basically. So it is kind of the ultimate EA that can test itself. Yeah. So if you think about what an EA is a list of if-then statements that it runs through every tick to decide whether or not an action or not action should be taken. Yeah. What an AI is exactly the same thing. Yeah. But it can think and it can adapt. So it's almost like the ultimate AI, EA, in that this EA trades RSI and ADR. This EA can test and trade anything in its own environment to come up with what to and what not to do. That's basically what it has been doing, and finding what works and what doesn't work. So it's kind of like the ultimate system parameter permutation machine with everything. It's it is for quant research. It's just it's nothing has come close to it. Claude's been good, but Claude hasn't been able to get data. I have now got data. I've given it data. I don't know if it's still up. But it built an interface. I said to it, I've got all this data. It blows me away every time it does something, basically. But I said to it, I need you to get this data. How's the best way I can send you data? I can't even find it. It's so far back in the conversations. I mean, this is the trouble. I've been talking to it for a long time. But it built a website, basically, for me to upload the data to. Let me just see if I can. I don't really want to give the IP address away of it. I can't remember what the IP address is, but it's amazing, you know. God, so long. It's what I spend most of my day doing now, talking to this bloody thing. I'm going to plug it into 11 Labs as well, so that I can actually talk to it. You know what? I'm so stupid. Why am I just not asking? Just ask him what it is. Should have thought that in the first place, shouldn't I? Rather than going back through. Search through our conversation and tell me where the bloody thing is I'm looking for and spending hours to do. This is the problem with AI, isn't it? People don't know how to use it. You literally use it for everything. Yeah. Replace this with that and everything's done. He's on a go slow because he's running, I'm probably running out of credits. He's doing a load of research. This is the only other downside I found to this. Yeah, there it is. I'm just going to take a screenshot of it because I don't want to give you the IP address of my AI server. But that's basically what he built, right? So I said to him, can you basically, he built me the EA to download the data from Tick Data Suite into OHLC candlesticks for him to use for his backtesting engine that he's building in Python. So I said to him, what's the best way to get this to you? Because it's like 600 meg, it's nearly a gigabyte of data. So he said, 1 second, go to this URL. And he built this website interface for me. I don't know what this is. And it's AI, obviously language. This is the worrying thing, isn't it? What does that mean in his language? I don't know if it's an artifact or what it is. But basically, he built this web page and said, okay, just click on the button up there, drag your file there, and it will upload it directly into the server. And I uploaded the first one. He went, got it, checking the data now. Yeah, and I basically clicked all these buttons, uploaded it. So I sent, I didn't say, could you build me a website so that I can send you information? He, off his own back, went, he's going to need a website to upload it. I'm going to need to build an interface. And these are the currencies we've been talking about. So I'm going to use these currencies from conversations way back. And he built it all. Yeah. And files go directly into his own folder on the server that he's going to use. It's just mind-blowing. Absolutely mind-blowing. Positioning with squeezes, is there an argument for a set percentage and just take the hit? Yeah, that's already built in. So the position trader EA has already got that in it, isn't it? In drawdown control, we have close all trades at maximum drawdown. Yeah, that's all built in. Again, these are what I have found to be the best ways to do drawdown control. For me, typically it's around about 9%. If I get into 9% of drawdown, from experience, the vast majority of the time, we are almost at the point of mean reversion. However, it usually goes with exhaustion beyond that and takes me to something like 15 to 20%. That's too much, because if it goes to 15 to 20 and accumulates for a new leg, that's it, you're out. So when you get there, typically I will pull the plug because I know that I can generate on average 15% a month. So if 3 months of the year, I have to take a loss of that, and I can generate 15% on average per month. It's a positive equity curve. So that's where I found the sweet spot. That's why that's in the EA. And obviously standard drawdown control is built in anyway. So have you become more profitable since you've been using advanced AI? No, because it hasn't. I haven't. First of all, I haven't forward tested anything that it's come up with yet. I've back tested it, and it's robust. So the strategies that it's found, like this one. That was run on the S&P 500. I run it on the DAX as well. But the strategies that it's finding have been through robustness testing as much as they can. So I know that they're robust strategies, and I know that they work, but I haven't forward tested them. So it's not, I don't think, going to make me necessarily more profitable, but it will probably change the way that I trade, in that a lot of the things that I do discretionary, I will probably replace, because if there is a best practice I can be convinced upon that will replace the discretionary part of me, why not do that? Why not fully automate? Whether it makes you more profitable, I don't think, because one of the reasons I think I'm profitable is because of what I do, not because of the strategies, because of what I see and when I press the button. And I don't think you can teach that. Everyone will do it in their own way. So that trade there will either work or it won't work. What I do today is me. Whether I do it right or wrong, I don't know. So I'll add these strategies into my portfolio because they're good strategies. But the strategies, like I said, the strategies that it's coming up with are not really strategies, they're edges. They are an edge is an inefficiency in the market. Strategy is a set of rules to trade by. The edge that you're seeing played out here is only executable 12 times a year. Yeah, can't execute it more than 12 times a year. There's 12 months in a year. This is a monthly strategy. It will execute 12 times a year. It's good. And I've tested it with multiple entry criteria, different times of day, different exits. I've robustness tested it as much as you can, considering there's only 2 system parameters. There's not many system parameter permutations you can run on something with 2 system parameters, but I've tested it fairly aggressively, and it works on all of them. So it's, for me, a confirmed inefficiency. It's not an inefficiency though, it's just something that happens in markets. So it is something that won't stop happening in markets as long as we have pensions. Yeah. So that I can add into my portfolio, but it's not going to generate a huge return because I can only do it once a month. So you either get in with $1,000 and hope to make 1 or 2 grand more, or you get in with 10 grand and hope to make 10 or 20 grand more, or you get in with 100 and hope to make 100 or 200 more. Most of the strategies it's found are of that ilk, where we're working on weekly and daily charts with confirmed edges. Anything it's finding intraday on hourly and 4 hourly is either statistical based, which has been in sample and out of sample tested, or it's indicator based, which is lagging price. So there is, although the system parameter permutation testing has been done, those edges are no different to what my edges already are, which is basically breakout, mean reversion, and trend. There's only 3 edges in the market. There's only 3 conditions in the market, really. So it can come up with 100 different breakout strategies for me, but they're all going to roughly trade roughly the same time when there is expansion in the market, when there is momentum. Yeah. So it can't come up with anything that I haven't already got. The opening range breakout strategy is a momentum breakout strategy. The Asian range breakout strategy is a momentum breakout strategy. The 4-bar contraction strategy, or the symmetrical triangle strategy, is a momentum breakout strategy. Yeah. If you put 3 momentum breakout strategies on the euro US dollar, they will all trigger at the same time. So that can't make me more profitable, because what it does is it multiplies my profit by 4 if I have 4 of them, and it multiplies my loss by 4 if I have 4 of them. So what am I doing? Nothing. I'm just multiplying profit and loss. Yeah, I can do that by adjusting my risk. Doesn't help me, does it? What I'm looking for is different edges. So different ways you can add risk into a portfolio that are uncorrelated. And that's the thing that I'm struggling with. It keeps coming up with things that I'm like, well, I know 3 higher highs and 3 higher lows in a row is a bullish move. Wait for a pullback into propulsion and trade it. Everybody knows that. Well, it's out there. If you didn't know it, now you do. But that's just a trend strategy, isn't it? 3-bar push, pull back, buy the dip, bang. What happens? If it's a trend, you win. If it's not, you lose. I've got trending strategies. I've got mean reversion strategies. I've got breakout strategies. So it's not finding anything new. It's finding variations of the same thing. Because like I said, in the bootcamp, if you watch all my education, there's only 3 strategies, isn't there? Markets are binary and there are 3 ways to trade it. There are 3 market conditions. You are range bound, you are breaking out of a range, and you are breaking out of a range into a range, or you're breaking out of a range into a trend. So therefore we have range, breakout, and trend. It doesn't do anything else. Market regime is one of those 3 things. Range bound, breaking out, will it trend or not? That's what's going to happen next. 100% guaranteed this will go back into the range or it will trend. There is only 2 things it can do, up and down. It knows that. So it's about applying risk in a different way. It's not about making more money. It's about diversifying and protecting to be more consistent. That's the way I see the usage for it. And obviously, if there's new edges that I haven't found and thought of that it can discover, like this one, fantastic. But if it can find one of these that works on an hourly chart, happy days. I'm not going to share it. You can find it yourself. Because like it quite rightly said, if you find an inefficiency in the market and everybody finds out about an inefficiency in the market, they will plug the inefficiency in the market, because inefficiencies in the market are where the market loses. Yeah. Banks and institutions don't like them. This is why we have propulsion gap indicators on our chart. Every single one of these is an inefficiency in the market. What does it do? Fills the inefficiency over and over and over again. Yeah. These are inefficiently traded instruments where you have buy side or sell side liquidity imbalanced. They have to balance it. Otherwise, it's inefficient. When you find them, they get plugged. If you find something like this that is not something that is created by an industry, if you like, it will get plugged. So, got to keep quiet. You know, AI is going to find this stuff, yeah? Because it's way more intelligent than we are. How you use it, though, that's the difficulty. Anyway, we'll go more into this afternoon in the member stream, maybe. So do you think discretionary traders are going to be taken over by AI? No, because discretion is ECU, isn't it? If you want to be a discretionary trader, you're never going to change that. If you suddenly start losing money continuously as a discretionary trader and you don't understand why, then you will keep losing money and you'll eventually stop because you'll go bankrupt. Therefore, you'll be replaced by default because you won't be around anymore. Because if discretionary traders cannot trade against, but quants have been around for decades in banks. We're doing all right. We just need to know how they work. Yeah. What I think is going to be the problem is when AI trades against AI. Yeah. So if you get AIs all trying to execute the same edge at the same time, they all want to buy it because of a certain condition. None of the AIs are going to sell it. So you can't have that. I don't know what's going to happen. You know, this is the thing. Like I said, that's our understanding of AI. That's AI now. Yeah. It's beyond us. We can't comprehend what this is going to do. We can't comprehend how it's going to create 80% unemployment in the world. We can't comprehend how it's going to build itself. We can't comprehend how much power it's going to require when it gets up to this point here. We can't comprehend it because it's never happened before. Same way as when COVID hit, never happened before. We couldn't comprehend what was going on. This is something else, isn't it? This is something, scarily beyond. So how it's going to affect this market, I have no idea. You can speculate as much as you like, but the only thing you can really do is sit back and watch, isn't it? Interesting times. I think this year is going to be phenomenal. But interesting wise, I think, but I think everyone will be redundant by the end of the year. Won't be any jobs left, will there? I watched the video just quickly because I've got to go to the dentist, but I watched a video this week about a guy that works in a marketing agency. And he, don't get why he's done it, but he's done it. He's put out a video about how he's automated his job. Okay, so he works in an agency who does search engine optimization, social media marketing, website optimization, all that sort of stuff. So, but basically, he works in the web industry. And he has used OpenClaw to create an agent that has created sub-agents that perform all the tasks that he does on a daily basis. He works from home remotely, and he operates through Slack. Okay, so all of his communication with customers and all his communications with his peers and his bosses is all done through Slack. Okay, he has created an AI agent, okay, which on a Monday morning looks at his work schedule for the week, completes his work schedule within 2 hours, and then makes him look busy on Slack while he doesn't work. Okay, so he's created an AI agent to do his own job, in effect, making himself redundant, and told his employers about it, right? Maybe he was leaving anyway, but that's what he has done at home on his own. He's made himself redundant, but basically he doesn't work now. He doesn't work for 2 hours a day. The AI does his job in 2 hours for the entire week. When new stuff comes in, the AI agent creates it and time delivers it. So it's not done in a minute and released in a minute. It's done in a minute and sent 3 hours later, because that's how long it would take him to do normally. Yeah. He's replaced himself. Yeah, think about that. Yeah, you sitting in your job now, how much of that is done on a computer? How much of it could you replace by telling AI to do the job for you? What would happen if your boss found out? And your boss will find out, because your boss is going to be building the systems and buying the systems from other people's that will do this. Yeah, where do you think redundancy and unemployment rates are going this year? If you are in anything related to computing. Yeah, think about it. This thing's only been around 2 weeks, OpenClaw, 3 weeks maybe. Now, it's so in its infancy from what it can do at the moment. And I think we're in a big paradigm shift in the way that this world operates and the way business operates and the way that we earn money. Yeah, it's all going to change, which means this thing is going to change. Anyway, on that positive note, it's Friday the 13th. Hope you don't get your P45 unemployment slip today. But I'll be back at 2 o'clock. And then we will have a look at what's going on in the markets today. News-wise, you haven't got to worry about much. And then we'll just do the usual this afternoon. 1:30, you got CPI. Yep, so there's a potential massive spike coming this afternoon, hour before market open. So we'll see how that's affected the market. If we've got a massive move, I probably won't do ORBs today. But we'll see how that impacts. All right. So have a good day. Off you go. If you want to join me this afternoon in the member stream, I'll be here at 2 o'clock. All right. Have a good day, and I'll see you next time.
Click, clack, charts attack, candlesticks, they spark the track. Leave move silent, market crack, profit stack, no turning back. Opening range, that's the game. Breakout hits, never the same. Algorithms play, but he rewires the frame. Banks whisper his name. Whipping forex, indices flex, numbers dance. What's coming next? Green lights flash, P&L stretch. Risk managed, he never sweats. Westpac buzz and traders peep. Lessons deep, no time to sleep. Market's a beast, Lee's got the leash. Feast at the feast, his game's elite. Market structures is domain. Leads the king, they know his name. Breakout sharp, he fuels the flame. Trading charts is not a game. Pip by pip, he